My name is Walid Alamuddin, and I will have the honor of introducing the panel that will be talking about banking and capital markets. And this is basically the Turkish Arab Economic Forum. I think on the banking side, we can clearly say that there has been the story of the Turkish Arab cooperation has been quite positive. I established, like a long time ago, the first Arab bank in Turkey, which was Samba, Gulf Bank. I was the CEO, and then I later helped establish two other banks. When we started this thing, the Arab banking share of the Turkish market was less than 1%. At this time, there are 9 banks with major Arab investment in Turkey, out of 52, which is significant. And their market share is around 10% in terms of assets. And basically also split between participation banking, Sharia-compliant Islamic banking, and conventional banking. Today we have represented here both sides, the conventional banks and the participation banks. We have very distinguished panelists. I'll give the floor latest to the capital markets, the chairman, Karada. Then we have Chairman Omer Aras, the chairman of Qatar National Bank's Finance Bank, Mr. Fahd Al-Mukhayzim, the chief strategist of KFH, which is the main shareholder in Kuwait Turk, and of course we have Mr. Temsah, who is representing Albaraka Türk, which is probably the oldest participation bank in Turkey. Now we have Mr. Temsah, who's representing Albaraka Türk. Mr. Temsah heads the treasury in Albaraka Türk. He comes also from a family of bankers. His father has been in Islamic banking as well in another country. And what they do in Turkey.
As many of you know, Albaraka Türk is the oldest participation bank in Turkey, dating back to 1984, when we were established by the Bahrain-based International Islamic Bank, Albaraka, which itself has a presence in over 15 countries, predominantly based, in fact, in the Middle East and North Africa. The story of growth for Albaraka Türk is also a story that coincides with the growth of participation banking in Turkey in general. Since 2005, we've seen the participation banking sector in Turkey grow by a compounded annual growth rate of roughly 28%. And we, on the back of that growth, have also seen our own branch network, in fact, grow from 24 branches in 2002 to about 212 branches in 2016, with one branch in Erbil. Our core activity as a participation bank, for those who are perhaps from overseas and aren't very familiar with participation banking, it is the equivalence of Islamic banking in the GCC and in other markets. And we also operate under Banking Law 5411 at the moment. So effectively, our core activity is collecting deposits and funds on the one hand, and lending those funds on the other hand to the real economy in Turkey. If you look at our structural breakdown in terms of our loan portfolio, what you generally see is around 15% allocated towards retail, 42% for the corporate sector, and around 43% for the SME sector. Albaraka Türk is also an institution, given its Arab background, is one that is very proud of the relationships which we've cultivated over the last decade, specifically with our Arab banking partners. Those partners have worked with us in multiple areas, ranging from sukuk and syndications to facilitating some of our trade finance payments for our customers. In terms of the participation banking industry in Turkey, today we are roughly, as His Excellency Mehmet Şimşek said, between 5 and 5.5% of a total banking sector, which at the end of 2016 was around $722 billion. So our combined assets was around $40 billion. Collectively, we have about $4 billion in equity and a weighted capital adequacy ratio of around 15%. The industry itself has grown for a multitude of reasons, which we'll be going into certainly at a later point in time. But if I wanted to at least convey to the audience two of the most important factors that we've seen, given our history here in Turkey, I would say the first reason would be the general level of either underbanked or in fact unbanked Turks due to religious sensitivities. By some credible sources such as the Global Financial Inclusion Database, roughly 25% of Turks do not have a Turkish bank account specifically for such sensitivities. So there certainly has been an element of organic growth for the Turkish participation banking sector throughout its development starting from the mid-80s. The other factor which I don't think is given enough credit, but it certainly has been a critical success factor for participation banking in Turkey, has been the holistic and systematic, in fact, framework which the Turkish public authorities have put in place to specifically drive Islamic finance forward and to, in fact, leverage on Islamic finance as a tool and means to engage with our Arab partners. So Albaraka Türk is very part of this story. We are joined in the industry by 4 other active banks, our colleagues at Kuveyt Türk, which are owned by KFH, our colleagues at Turkey Finance, which are owned by NCB, and we had 2 newcomers in 2015 and 2016. In 2015, we were joined by Ziraat Katılım, and in 2016 by Vakıf Katılım. So the story of Albaraka Türk is, to a certain extent, the story of participation banking in Turkey. It's an area which we strongly believe in. We believe in it because of the underlying dynamics of this enormously large and fast-growing and young country called Turkey. And we are committed to the growth of participation banking, as are the other stakeholders who have been critical to its success here, including the public authorities. Thank you.
It's good to know that there's interest in Islamic banking buying conventional banks. This has been done successfully in other countries in the Gulf region. We'll now move with Mr. Temsah to the Sukuk market. The Sukuk market is particular and very important in the Arab and Turkish market, but with a lot of room for improvement. Mr. Temsah is a key player, and Albaraka Türk is a key player in the Sukuk market in Turkey. Mr. Temsah, please.
Thank you very much, Walid. In fact, oftentimes when we think about the word Sukuk, it tends to be the buzzword in Islamic finance. I worked for about 4 years in London in the early 2000s when the Islamic finance market was really taking off. And at that point in time, we hadn't seen as many sovereigns, as many financial institutions issuing Sukuk. The history of Sukuk market in Turkey is actually quite an interesting story. And one must give credit where credit is due, because the first Sukuk in Turkey was issued in 2010. It was a 3-year, $100 million issue that was listed on the London Stock Exchange, and it was done by our colleagues at Kuveyt Türk. That same year, the Capital Markets Board, which is our regulator, issued the first legislation on Sukuk, which we call lease certificates in Turkey. That first communique or that first legislation also touched on how the SPVs would be set up, which we call here as asset leasing companies or ALCs. The following year, the Turkish government, in fact, passed an omnibus bill, removing many of the tax and levy hurdles that tend to bog these kind of transactions down. 2012 was a critical year, in fact, for Turkey, because that year the Turkish government also amended Public Finance Law 4749, in essence allowing the Turkish treasury to issue both local currency as well as hard currency Sukuk. And in fact, since 2012, the issuance of Sukuk has been quite a regular part of the debt management program of the Turkish treasury. 2013 was also a game-changer year for our industry. That year, the Capital Markets Board issued its second legislation or second communique on the issuance of sukuks and ALCs. And in that second legislation, they introduced a much larger plethora of sukuk structures which could be used. Those include structures which are more familiar in the GCC, such as musharaka, mudaraba, wakala, and istisna, which is used for procurement and construction projects. Last year, as well as I'm sure many of you know, in August 2016, the Turkish government passed a legislation to enhance the investment environment in Turkey. And that legislation virtually removed all the taxes and levies which are applicable to sukuks. Those taxes tend to include stamp duty tax, for example, corporate tax, VAT tax. These taxes all have to do with the transfer of assets from the borrowers to an SPV when a sukuk is structured. In any event, I've shared a bit of these boring details in terms of the harmonization of regulations in Turkey to paint a very specific picture that we have seen a progression of regulations in Turkey to provide the right context for sukuk issuance. So what has been the result of this? If we look at total sukuk issuance out of Turkey, going back to 2010, there's been roughly $15 billion of sukuk issued. 10 billion have been dollar denominated, and about $5 billion equivalents have been in the form of Turkish lira, and to a smaller extent Malaysian ringgit done by some of our peers. Roughly 60% of all that issuance came from the Turkish sovereign, and roughly 40% came from the Turkish participation banking sector. These sukuks have been issued for a plethora of reasons. The Turkish sovereign has issued dollar-denominated sukuk to enhance its international profile, whereas it has issued local currency sukuk predominantly for the participation banks in order for us to place some of our liquidity with them. What has also been very useful for us as participation banks is we can in fact place these hazine or treasury securities, both the dollar-denominated ones as well as the lira ones, back with the central bank in terms of our repo open market operations. So that certainly reflects a level of sophistication in Turkey in terms of the issuance of sukuk and its use on our balance sheets in order for us to take liquidity from the central bank. When we look at what kind of structures have generally been popular, what you tend to find is that in Turkey, the participation banks in the early years were issuing 5-year senior unsecured sukuk for their general balance sheet growth. But in the last years, we've seen more of a focus on Tier 2 subordinated sukuk. The reason for this is fairly straightforward. With recent Basel III guidelines on improving capital adequacy, the Turkish banks have also seen sukuk as a means of improving and enhancing their equity positions. And with the appetite in the Islamic space in terms of that liquidity sitting on the balance sheets of GCC banks willing to invest in longer dated issues, both the participation banks have been quite keen on capturing some of that liquidity. So when we look at the history of sukuk issuance in Turkey, we see that the Turkish government through the hazine has been involved. We've seen the participation banks involved, but there's a missing piece here. And that missing piece is the corporate sector. Well, why is this important? If we look at Turkey's funding requirements through to 2023, what we see by some estimates is that there's about $350 billion in projects that require financing. And when we look at that and take into account the relatively lower domestic savings rate in Turkey of about 15%, what that basically tells you is that the corporations in Turkey, which have historically borrowed some of their hard currency liquidity from the banks to the loan market, sukuk has to be seen as an alternative viable means of raising funding. Simply put, the Turkish banks do not have sufficient equity to fund $350 billion in projects. There is that kind of liquidity sitting in the GCC and in Southeast Asia, as well as other Muslim majority countries. So sukuk, in fact, does have a bright future in Turkey from that point of view. And when we couple this with the fact that the Turkish government has just in August 2016 removed all the taxations applicable to sukuk structures, thereby removing the last bottlenecks in terms of the issuance potential, we at Albaraka Türk certainly believe that there's a very bright future for corporate sukuk issuance in Turkey. Having said that, some bottlenecks still remain and some challenges, specifically with regards to three core areas, and I'll try to keep this as brief as possible. When we look at asset eligibility for any Turkish corporate, or in fact any corporation anywhere in the world, to issue a sukuk, and in order for that sukuk to be tradable in the secondary market, the issuance size has to be underlined by 33% tangible physical assets. According to Turkish law also, when any corporation wants to issue a sukuk, those sukuks have to be unencumbered. So in other words, there cannot be any mortgage or security or lien on those assets. Now, given the fact that corporations obviously leverage themselves, for corporates in Turkey who are interested in issuing a sukuk, for them to find sufficient tangible assets on their balance sheet which are unencumbered, this could prove to be somewhat of a challenge. When we look at the also ALC regulatory environment in Turkey as well as corporate governance standards, according to the amended communique or our second legislation on sukuk in Turkey, only select parties can actually issue an SPV or an ALC. Those tend to be banks, financial intermediaries, or companies with an investment grade rating. So if you are a Turkish corporate today and you want to issue sukuk by raising liquidity from GCC investors, you need to be able to go to these banks who would have to sponsor this sukuk. The last thing I'll say in this regard is with regards to pricing requirements. There's a huge divergence between what GCC investors today are placing in terms of a risk premium on Turkish assets versus what, in fact, Turkish corporates are willing to borrow. So that has also certainly impacted the sukuk issuance.
Any challenges, future, in very general terms, that you see ahead and how to tackle them?
Just further to what Dr. Omer mentioned, the importance of stability can certainly not be understated. Now, of course, being participation banks, we also carry our own challenges, as do, in fact, most of the Islamic banks operating. We have real structural challenges, which I'll mention very briefly. First and foremost would be with regards to our customers. In Turkey, there's a lack of public awareness as to what specifically we do. We are working with other stakeholders in the industry to specifically address this. Another area would be the fact that we're in fact shifting as banks or participation banks from a product-centric based model to a customer-centric based model. That involves investing in processes, in technology, changing the mindset of your employees, and this is also an ongoing process for us. Perhaps the biggest challenge has to do with the very demographics of Turkey, and this will be the last point which I'll certainly end my part on. The Turkish nation is a very high-tech savvy nation, which is increasingly relying on technology for its requirements, banking certainly being one of them. As a participation bank, we certainly are finding that challenging to be able to keep up with the speed of change. Of course, we're investing in developing a digital banking platform, working on improving our mobile banking, internet banking, to be able to engage our customers on a more effective basis, and to be able to provide them with the resources that they need to do their own requirements. Having said that, we are very optimistic for the future. We, as Fahad also had mentioned, we believe in the long-term potential of Turkey. We've been here for 30 years. We believe we have the right ecosystem around us and the right support from the authorities to push participation banking forward. Thank you.
Excellent. Thank you.